Hello everybody. I hope you guys are well. I also hope you guys can hear me. So, welcome back to your Text UAB tutorial, your Monday class. I hope you guys had a wonderful weekend and you are ready to tackle the week. So, if you guys can hear me, please just show by a thumbs up before I start with the class. Great stuff. Seems like everybody can hear me. So, today what we're gonna be focusing on is VAT, right? So, I just have like a heads up for you guys that that is one of the topics that you're gonna see from your test 1, most probably up until your test 6. That is if you're writing 6 assessments this whole year, right? So that is always tested, right? It might be a 10-mark question, a 14-mark question, a 6-mark question. That will always be there, and you surely have to expect it in your assessment 1 because it's gonna be there, right? So enough about that. Now I'm gonna try to explain to you guys what is VAT and what really goes on into this topic that is so-called VAT, right? So just try to pay attention to this class, guys, because if you understand VAT in this class, you won't struggle for the rest of the semester and you'll be very interested in the topic, because I feel like it's one of the easiest topics that are available in text, as long as you understand the foundation and the inception of the topic, right? So as we've discussed, by the way, for those that just joined us, my name is Millicent and I'm gonna be your text to AB tutor if you are willing to stick around, right? So, as discussed from our previous classes, VAT is a type of tax, right? We all know that we are doing tax, we are in the tax module, right? And then we are taxed in various ways, right? According to the South African government. And one of the ways that we are taxed through is through VAT. And I explained in the previous classes that when we are taxed through VAT, right, we are taxed we are levied on the goods and services that we buy on the daily basis, right? Be it we're buying products from ShopRite, be it we're buying products from Pick and Pay, that is how we pay VAT, right? So basically everybody buys VAT. As long as you know that, not buys VAT, pays VAT. As long as you know that you are able to buy bread, you are able to buy clothes, whatever that you buy on a daily basis, even once in a month, that sort of consumption that you do, if you look at your slip, right, there is a portion that says that you have paid for that for whatever thing that you would have bought, right? So today we're going to discuss on how the VAT we pay is paid to the government, and also how much they are supposed to pay to the government, and also who is able to be a registered VAT vendor, right? And when I say a registered VAT vendor, I'm talking about somebody who is allowed to charge VAT, right? So what I'm trying to say here is you can't just open a business and then start charging people VAT unless you're a VAT vendor, right? So what I'm also saying here is that obviously a lot of you guys, maybe you have started businesses before, maybe small what is it, buying and selling things on campus, right? You have maybe sold what do you guys sell? Maybe stationery. I don't know what students sell nowadays. Maybe stationery, maybe phones. Yeah, I've seen a lot of people selling and buying iPhones, and what else? Maybe provide services, right? Like cleaning, washing shoes. I've seen in the group chats that people do that a lot, right? So you realize that most of those people, you don't get charged in those kind of enterprises, right? And the reason is not everybody is allowed to charge VAT to people, right? You have to be registered as a VAT vendor for you to be able to charge VAT around people, right? So this slide here explains to you guys that VAT is levied on the supply of goods and services by a VAT vendor in the furtherance, excuse me, of their businesses, right? So what this basically means here is that whoever supplies goods and services, right, um first of all they have to be registered as the VAT vendor, and then now they levy on. Can you just make sure that your mics are muted, guys? Thank you. Guys, can you just make sure that your mics are muted, please, so that you won't disturb the rest of the class? Thank you. As I was saying, right, VAT is levied on the supply of goods or services by the VAT vendor, right? So the VAT vendor is the one that levies or charges VAT, right? So in this case, I'm gonna keep on giving an example of Pick n Pay, right? So Pick n Pay would be the VAT vendor, right? So it charges goods on the supply of goods and services, right? There are other companies that don't offer goods, but then they offer services, right? And they're supposed to be registered as VAT vendors for them to be able to charge VAT on people, right? So the VAT rates can either be 15% or 0%. Okay, so I'm gonna explain to you guys why sometimes the VAT can be 0% and why sometimes it can be 15%, right? Obviously there are reasons to those things. Okay, so moving on to the next slide, right? We're talking about the effects of VAT, right? So VAT is charged on the supplies made by the VAT vendor, right? Is called VAT outputs. VAT claimed on the supplies received by a VAT vendor is called VAT output, right? What am I trying to explain here? Right. VAT can either be charged, right, or claimed, right? So when we are charging VAT, right, we are charging on the supplies that are made by the VAT vendor, right, and it's called VAT outputs. When we are claiming VAT, we are claiming on the supplies received by the VAT vendor, and it's called VAT inputs, right? So I'm gonna make use of Pick n Pay as my example, right, so that it can make sense to you guys. What I'm saying here is Pick n Pay is the VAT vendor, right? So it charges VAT when it sells products, or it receives or claims VAT when it purchases products, right? You have to pay attention to the flow of the goods, right? Whenever your goods or your services are going out, that is a sell, that's when you charge VAT. But whenever you're receiving goods or purchasing goods, right, that is your VAT input, right? This is all gonna make sense to you why we need a VAT outputs and why we need a VAT inputs, because those are our bases, or that's our foundation on how to calculate the VAT that then goes to the government at the end of the day. Right. So the thing that you have to take note of the most, right, is that the flow of goods is the one that helps you, right? Whenever the goods are going out, it's VAT output. Whenever the goods are coming in, it's VAT input. Whenever a service, it can not only be a good, but it can be a service. Whenever you are delivering a service to somebody else, it's a VAT output. Whenever you're receiving a service, right, it's a VAT input, right? So the trick about you being able to differentiate the difference between VAT outputs and VAT input is you have to take note of the flow of the goods or the services. I should have corrected my slides here and say all the services, because it doesn't apply only to goods, but it also applies to services, right? So moving on, right? Each transaction can be subject to VAT, right? So all the transactions that can happen, be it you are buying a car, be it you're selling a car, be it you're paying your rent, be it you're getting bank charges, all the transactions that you can think of, they are subject to VAT, right? It only depends whether the VAT it's subject to is on a 15% rate or a 0% rate, right? So the seller has to charge VAT and pay it over to SARS and only if they are a registered VAT vendor, right? So I've explained to you guys before that whenever somebody is charging you that, right, you have to question in your mind that are they a registered vendor, because they have to be a registered vendor for them to charge. um, can you guys mute yourselves? Oh, please just mute yourselves, guys. Thank you. um okay, moving on. What was I saying? I was saying that for a seller to be able to charge or claim VAT, right, the person has to be a registered VAT vendor, right? So in all the transaction and all the tests that you're gonna have to go through, right, you don't have to just see an amount and then assume that that amount has to be, you have to calculate VAT on it, right? The only reason why you have to calculate, or only when the person is a registered VAT vendor, right? So the purchaser can also claim VAT paid to SARS only if they are a VAT vendor, right? And we all agree that SARS is an institute or a part of the government that is responsible for taxing the people in South Africa, right? That means that if a purchaser or seller is not a VAT vendor, they cannot claim or charge VAT, right? So your takeaway from this slide is that only VAT vendors are able to claim or charge VAT. If you are not a registered VAT vendor, you are not allowed to charge VAT, and you won't be able to charge VAT, right? Moving on. Now I've been talking about VAT vendors a lot. Now I need you guys to know who registers as a VAT vendor, right? Guys, this is a very important slide, right? I remember when I was doing BCTA last year, we actually got a question that was asking who registers as a VAT vendor. I think we got it in like 2 tests, if I'm not mistaken, right? So this is a question that is regularly asked, right? So you just have to know it off by heart, that who registered as a VAT vendor, right? As I said before, guys, since I'm also a student like you guys, and I've been where you are, I really kind of have an idea of the things that are tested in your assessments, or the things that they might be able to ask you in the final exam. That is why I try to give you a heads up when I feel like something has been examinable before and is more likely to be more examinable in the future, right? So the slide says you have to register as a VAT vendor if the value of your taxable supplies is or will be more than R1 million for the next 12-month period. Or you can register as a taxable supply if, as a VAT vendor, if your taxable supplies are more than 50,000, right? So the difference between these two points is that the first point that says have to register, right, it means that it's a mandate, right? You are supposed to register, you are obliged, you don't have a choice, right? You have to register as long as you're running a business, or you have taxable supplies, right? And then your supplies are more than R1 million, right? Then you don't have a choice. You have to register as a VAT vendor. It's a non-discussion question, right? And you can register as a VAT vendor, right? You are not mandated here, you're not obliged, it's not a must, right? When your taxable supplies are more than 50,000, right? So that is the difference between the two, right? The first one, when your taxable supplies are more than R1 million, right, you have to register, it's a must. When your taxable supplies are more than 50,000, right, you can register if you want. That is the difference between the two slides, the 2 points here. I'm sure this is very easy to understand on registration as a VAT vendor, right? So now we go to calculating VAT payable or refundable, right? Because I've been singing to you guys that VAT is a form of tax that we have to pay over to SARS, right? And I also mentioned that there is VAT outputs and VAT inputs. The VAT output is the one that you charge, and the VAT input is the one that you claim, right? So I've explained to you guys that these are the basis for calculating the VAT that can be payable over to the SARS or that can be refundable from SARS, right? So the VAT output, guys, the one that you normally get when you charge or when you sell products or when there's an outflow of goods, right? That's the one that has a positive sign. The VAT inputs, the one that you claim, the one that you the one that you receive when there is an inflow of goods in your business or services, is the VAT inputs, and it has a negative sign. What am I saying? I'm saying that in your test and exam, right, you have to take note at the flow of goods. Obviously, it's going to be a list of transactions that you're given, maybe 10, maybe 12, maybe 15, right? And you have to be able to see that, oh, this is an outflow of a good, so the goods are going out, it means it's an output. Oh, this is an inflow of goods or services, so the goods are coming in, it's an input, right? So when you have identified all the outputs that you have, then you know that you are going to add them all together because they all have a positive sign, right, for the output VAT, right? And then for the input VAT, when you've identified all the input VAT, you're going to have to add them together, but you will deduct them from the VAT outputs, right? So that addition and subtraction is going to give you the VAT due or the VAT payable over to SARS, right? So that is how Pick n Pay pays the taxes to SARS, right? Let me give you a realistic example, right? Pick n Pay buys what do we find in Pick n Pay? Pick n Pay buys bread. Okay, Pick n Pay makes bread sometimes, but then let's just think of it like maybe when it was able to buy everything that it sells from a supplier or a wholesaler, right? So when it buys bread, and then when it buys chips, when it buys meats, when it buys all the appliances in Pick n Pay, right? That can we all agree that that is a purchase, right? So if we look at the flow of goods in this case, we are receiving bread as Pick n Pay, we are receiving meats, we are receiving milk, we are receiving chips, all the snacks that we buy in Pick n Pay, right? So we are able to claim VAT on the receipt of goods that we're buying from our wholesaler, right? So when we are selling those chips, when we are selling that bread, when we are selling that meat, we are then able to charge VAT, right? So that VAT that we charge, let's say maybe in a year, all the sales that Pick n Pay has made, right, it was able to charge VAT worth 1 million, right? And then with all the purchases that it made, it was able to claim an input VAT of like 500,000, right? What you do then is then subtract the 500,000 from the 1 million for you to be able to get the VAT that is due, that is payable to SARS. Okay? So this is now an example that I've given you guys so that you can understand what I'm trying to say. Okay. So it says Millie is a general retailer, right? She purchased goods from a supplier, right? The keyword here is purchase goods, right? So when I'm purchasing goods, it means I am receiving goods from the supplier, right? The flow of goods in this case is in because the goods are coming to me, right? So most probably I have to look out for the VAT input because the goods are coming to me, right? And then the goods from a supplier who is also a registered VAT vendor for 600 rand excluding VAT, right? And then sold the goods for 1 million rand excluding VAT. Now I'm selling the goods, right? I'm taking the products out of my business, right? The flow of goods in this case is saying out, right? So I will have to charge VAT output on whatever amount that I would have sold the goods for, right? What I like you guys to pay attention to is that on the two amounts that I've given you, the 600 for the VAT outputs is excluding VAT. I'm going to explain to you guys why that is important. And the the hundred the 1,000 rand for the sales that I've made also excludes VAT. Now we have to calculate the VAT payable or refundable to Millie, right? So we have to calculate the VAT now. Okay, moving on, right? So we have agreed in the beginning of the class that VAT is rated at 15%, right? I also remember saying that VAT can also be rated at 0%, but there are specific scenarios where VAT is only allowed to be 0% on certain taxable supplies, right? And this case, it's not one of them, so that is why I used 15%. Right, so my VAT output was 1,000 rand multiplied by 15%, right? The 1,000 rand was for the outflow of the goods, that was the goods that I sold, that is the VAT outputs, that is 1,000 rand multiplied by 15%. Okay, and then for the VAT input, right, is for the goods that I've received. If you look at the flow of goods, I'm getting something into the business, and then the 600 rand multiplied by 15%, I get 90 rand. The VAT payable to SARS is 60 rand. What would you okay, sorry, okay, what would you do if the sales 1,000 rand was inclusive of VAT? Right, going back to the question, right, here they said the 1,000 rand excludes VAT, the 600 rand excludes VAT. Now my question to you guys is, which percentage would you have used if the 1,000 rand was including VAT? Right, this is taking you back to your grade 12 math, that when an amount, right, already includes the VAT, right, it means that that amount is not 100% anymore, but it also includes a certain percentage of the VAT that is included, right? In simple terms, I'm saying that what we did to get the VAT on this question, we said 1,000 rand multiplied by 15 over 100, right? 15, the number of top, is what we are looking for, right? Okay, let me go back here. 15%, the number of top, is the one that we're looking for, and 100% is what we have, right? Do you guys remember that thingy that we say what we have, what we're looking for over what we have, right? So the 100% is what we had because it was excluding VAT, and then the 15% is what we were looking for, that was the 150, right? So this question here, which reads, what would you do if the sales of 1,000 rand was inclusive of VAT? Meaning to say it's no longer 100% anymore, but it also includes VAT, and our VAT is 15%, right? So what you would do in this case, you would say 15% is what we're looking for. What we have is 115, right? I know maybe for some of you guys it doesn't make sense as of now, right? But if you don't understand what I've just explained to you guys, just get this, right? Whenever in your assessment they say that all amounts are inclusive of VAT, right? The percentage that you use is 15 over 115. And when they say all amounts, like this question here, they are exclusive of VAT or they exclude VAT, the percentage that you use is 15% or 15 over 100. It's the same thing. Inclusive of VAT, 15% over 115, exclusive of VAT, 15%. The reason why I'm emphasizing on this, that's the only way people fail VAT. If you don't read the question and you really don't know whether the amounts that were given to you, they include or exclude VAT, you will fail your calculation, and there are no principal marks for maybe knowing that you're supposed to calculate VAT, because that's how they treat people, right? So you have to know whether the amounts that you've been given, they include or they exclude VAT, because that will make a whole difference in your calculations just by knowing that. Right, am I making sense, guys? Please, guys, don't be afraid to ask me questions. If you feel like I'm not making sense, please, you're more than welcome to ask. Somebody raised their question. you can unmute yourself or type in the chat box, but unmuting yourself is more quicker. Okay, maybe it was a mistake, right? But please guys, right, remember, maybe next month for some of you guys, um um what did I want to say? Okay, disregard that, right? But what I'm trying to say is that, guys, please, 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 you can't take 2 hours of the day only to join text and then a night class, and then you get out of the class and you had no idea what I was trying to explain to you, only because you didn't have the guts to ask the questions, right? So please, 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 I urge you guys, if you don't understand what I'm trying to say, or if you really have no idea what I'm saying at all, please, please, please ask the question so that I can clarify for you, right? Let's move on. Mechanics of VAT, right? So this one I'm gonna read through because that is the whole thing that I've been explaining before. Oh, I'm touching this thing way too much. No, yeah, this is the thing that I've been explaining about the VAT percentages, right? So I'm gonna read it through so that you can just get so that you can just listen while I read, right? When calculating the amount of VAT on a transaction, you must always deduce from the question whether the amount includes or excludes VAT, right? That's the first thing that you do. You get a VAT question, now you have to deduce, do the amounts include or exclude VAT, right? If an amount excludes VAT, simply multiply by 15% to determine the VAT charged, right? That's the first thing. If an amount already includes VAT, right, the tax fraction you use in that case would be 15 over 115, right? And I think I've already explained to you why it's 115, but if you don't understand it as of now, just put it in your head that when it includes VAT, the tax fraction is 15 over 115. Now let's try the previous example, right? But we have to change the scenario to amounts including VAT, and you see what I mean by the fraction. The fraction changes and the values change as well, right? So the output VAT, right, meaning to say now the VAT here is still VAT outputs. There's nothing that has changed, but now the only thing that has changed is the VAT fraction, that is 15 over 115 multiplied by 1,000 rand. Do you guys realize that in our previous slide we got 150 rand? Okay, here's the previous slide. We got 150 rand, right? And now the new calculation gives us 130.43. Do you guys realize that only missing the VAT fraction will give you a wrong answer, right? And trust me when I tell you guys, there is no principal mark, right? Because for you to be able to say I am very good at calculating VAT, you have to know the fraction that you're using for you to be able to say, oh yeah, I know how to calculate VAT. So it's very important for you to be able to know which fraction you're using, so that you can make sure that you're using the right fraction, right? So the purchases, those are the VAT input tax. So in this case would say 600,000 from our previous example, multiplied by 15 over 115 to get 78,000, right? So the difference between the two is gonna give us 52 rand. Do you guys both all agree that the 52 rand is now different from the 60 rand that I had gotten before, right? So no matter how much you might try to say to yourself, oh, this is math, as long as I know that I'm adding this, I'm subtracting this, I'm gonna get, even if the answer is different, I'm still gonna get a few marks. Not in VAT, guys. You won't even get a half mark. Even if you have done the VAT output correctly, but if you use the wrong fraction for the VAT outputs, you won't get any marks. Okay, I hope that makes sense. So for your Wednesday class, I've prepared for you guys a small question, right? I think okay, I'm gonna send it tomorrow or today in the group chat, so that you can just take a look at the question and we can do it together in on Wednesday, right? And the reason why I really want you to be on the Wednesday class is because text is a more practical module, right? So the things that I'm explaining to you now, right, they won't get tested to you theoretically, right? They won't be like, what is VAT in your test one? No, they will ask you to calculate VAT, right? And the example that they will give you in the calculation of VAT is not gonna be the 600 rand and 1,000 rand that I've given you. It's gonna be more complex and a bit more complicated, right? So the reason why I really want you to join the Wednesday class is that even though we would have done the slides on Monday, right? But for you to be able to be well prepared for your assessments whenever you're gonna write them, you have to at least have seen me doing a past paper question with you, or at least a question, so that you know how to structure your answers in the test and how you go about vet questions or whatever question that we'll be doing for the week, right? So um this is also very important, guys, right? it's a bit it's a bit tricky, but it's also important, right? So in that we have what we call tax periods, right? We have what we call category 1b, category A, B, C, D, E, right? So all these categories, right, they are differentiated through months, right? So the first category is a 2 month basis, right? The second category B is 2 months, but then the difference is when they end and then when they start, right? The first one ends in December and then starts in, no, it starts in December and then ends in Jan. The second one starts in Jan and then ends in Feb, right? My second year lecturer said to me that the difference between category A and B, they don't really ask the difference, but then they just say that for you to be able to know which one is the one that ends with Jan and which one is the one that ends with Feb, is you have to look at the letters, and that's what I've been doing all along, right? The A um ends in Jan because there is a, right? So the A in the January is the one that's going to remind you that it's going to end in Jan, and then the B in the category B is going to end in Feb, and the B in the Feb is going to remind you that category B ends in Feb, right? And then when it ends in Feb, it also means that it's going to start in March and then end in April, and then so on, right? Same goes to the category A, right? You really don't have to know when and how they end, because I've never seen any question that asks you that, right? What you have to know is that a category A has 2 months, a category B has 2 months, and then a category C has 1 month, a category D has 6 months, a category E has 12 months. This you have to know off by heart. Why am I saying this? Right. In your tests and exams, they will tell you that Millie is a vet vendor, and she falls under category A. Can you please calculate the vet payable or refundable over to SARS? Right. So when you're calculating the VAT category for 2 months, right, it means that you have to apportion or allocate your calculations to 2 months, right? So going back to this question, right? Where's my person? Okay, going back to this question, this 600,000, right, can be on a monthly basis or a 12-month base, right? So if you're in an exam, right, and then already at the beginning of the scenario, they told you that Millie falls under category A, and now you know that category A is on a 2 month base, right? And then now they say that the 600,000, the 600 that she got, right, is on a monthly base. You're gonna have to say 600 multiplied by 2 months, because when you're a category A VAT vendor, right, it means you calculate VAT on each and every 2 month period. When you're category VAT, when you're, oh my goodness, let me drink water. When you're a category C vet, right, it means that you're calculating that on a monthly basis. So it means that if this 600 rand is on a monthly base, you won't have to multiply it by 12, right? But then if they say annually or during the year, I got this 600,000, meaning to say this 600,000, it fills out the whole 12-month period, right? I would have to say 2 over 12 multiplied by 600. Guys, am I making sense? Should I repeat myself? Please, guys, stop giving me the silent treatment. Oh, somebody said I'm making sense. Thank you. I hope you guys understand what I'm saying. So, when it's a category D VAT period, right? It means that you're calculating that on a 6-month basis, right? So let's say, for instance, you get a rent, you have paid a rental expense of like okay, somebody said I should repeat. Okay, let me repeat. It is very important for you guys to know the tax periods, right? Because sometimes in the assessments, right, they can just tell you that Millie is a VAT vendor who falls in the category A. The following transactions they happened in the 2026 year of assessment. Please calculate the VAT payable or the VAT refundable. That's it, right? The fact that they told you that I'm falling under VAT category A, it means that I'm going to have to calculate my VAT after every 2 months or pay VAT after every 2 months, right? So it means that if I'm a student and I'm living in a commune and I'm paying rent every month, right? It means that the VAT that I'm going to pay, it has to include that rent that I'm paying every month. But since I fall under category A, it means that from Jan to February, that's the rent that I use to calculate my VAT. From Feb to March, that's the rent that I use to calculate my VAT. So if I'm paying 1,000 rand per month as my rent, it means that when I'm a category A, I have to say 1,000 rand multiplied by 2. So this depends. Sometimes they can say that Millie paid 12,000 rand for her 2026 year of assessment living in a commune in Auckland Park, right? So meaning to say I won't be able to use the whole 12,000 as my VAT in my VAT calculation because I am a category A VAT vendor. Meaning to say I'm gonna need only 2 months 2 months worth of rent for me to be able to calculate my VAT. What am I gonna say now? I'm gonna say 2 months over 12 months multiplied by the 12,000. That is the amount that falls through the whole annual year for my VAT. Does that make sense? So that is why it's very important. People say, someone said it makes sense. So that is why it's important for you to know the tax periods. There is never ever 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 a question that you're gonna find that gonna say, please list the tax periods you know. No, tax doesn't work like that. It teaches you that tax periods are the categories A, B, C, D, E, and that's it. Now you have to know how many months are in category A, how many months are in category B, how many months are in category C. Because the only way they can test whether or not you know the category is they tell you that Millie is in category C. They are done. They won't tell you that so category C is a 1 month per return. So now what you have to do is that all the amounts that we have given you, you have to say 1 over 12 and so that you get the right answer. No, you have to know on your own that this is what I'm supposed to do here, right? So this is the difference between you, a varsity student, and somebody who is doing their matric, because now they give you the information, they give you the knowledge, and now it's up to you whether you're going to able to identify it in your assessments and make use of that information. Okay, so moving on, right? transactions that are subject to VAT, right? Not all transactions are subject to VAT, right? As I was saying before, have you ever seen that when you're taking a taxi, maybe to now, okay, before I even talk about the taxi, right? Now I've told you guys that everybody pays VAT. We all pay VAT at some point in our lives, right? But then, did you guys think that maybe when you have most of us here have used taxis before, right? And when you're in the taxi, right, you have you ever gotten to a point where the taxi driver says, oh, the taxi is 15 rand plus 5 rand VAT? Never, right? And maybe you are at a fuel station, right? And then they say that, oh, fuel is like 20 rand per liter plus 5 rand VAT. Never, right? Okay, maybe not all of us drive, but then it doesn't happen, right? So what I'm trying to explain to you guys is that not all transactions are subject to VAT. Some transactions, they are subject to VAT, some transactions are not, right? This is where VAT gets tricky, right? Because you are given a list of transactions, right? The lecturers want you to know which transactions are subject to VAT and which transactions are not subject to VAT, right? And for the transactions that are subject to VAT, you have to either use the 15% or the 15 over 115, depending on whether or not the transaction include or exclude VAT, right? But there are transactions that are not subject to VAT. You have to let the lecturer know that this transaction is not subject to VAT, right? And give a reason why you think that way, right? So what I'm going to teach you guys now are the reasons you have to give to the lecturers, and why the transactions, and what are the transactions that are not subject to VAT. Excuse me, right? So transactions that are subject to VAT are those that meet the following definition, right? The supply of goods by a VAT vendor in the furtherance of their enterprise, right? So whatever uh this definition, right, if you take a look at your UJ slides, it has been, what is it called, it has been, I don't know the word, right? But it has been subdivided, right? To explain to you guys the supply of goods or services, and then also the VAT vendor, and then also what it means in the course of furtherance of the enterprise, right? And then if a good or a services is able to meet that definition, right, then it can fall under the goods and services, right? Then it can be able, then we are able to charge the VAT on that specific good and services, right? But what I like to teach students is the other way around, right? What do I mean by the other way around, right? This one here, for me, I feel like it's easy for you to get the hang of, right? You don't have to cream the definition, right? But you have to know that goods that meet this definition, or all the goods that we charge VAT on, meet this definition, right? What I like to focus on are the things that do not meet this definition, or the things that are excluded from this definition, right? Because I feel like it's easier that way, right? Because this definition, the goods that can meet this definition, there are a lot, right? We can't even list them. We'll spend the rest of our lives or day trying to give you the list that meets this definition, right? But the list that doesn't meet this definition, it's more easier to understand, and also it meets the scope of your, what is it, your studies, right? So that is why I try to focus more on that, other than like subdividing the definition like what the slides at UJ do, right? But I'm not saying that that's wrong, right? It's very correct. It's just that I prefer doing the other way around, because I feel like that's what helped me understand, and I feel like it's better for you to understand that way if you're somebody like me, right? So moving on, right? um right, the moving on to the types of supply, right? Now we're getting to the part where we know which goods are supposed to be taxable and which goods are not supposed to be taxable, and at what rates, right? So for the types of supply, we have our taxable supplies. it's in the word, guys. Taxable supply, it means there is tax on the supplies, right? So when we're saying supplies, we're referring to the goods and the services, right? Exempt supply, these are the goods that do not have VAT, right? So what I was saying to you guys in the previous slide, that sometimes you get a list, right, of transaction in your tax and exam, and then they ask you to calculate VAT on that list, right? Some of the goods, or okay, some of the things on that transaction list, right, they are taxable supplies, meaning to say you go on transaction, right, one, and then you'll be like, oh, this is a taxable supply. What do? I use 15% because it excludes VAT. Oh, this is a taxable supply. What do? I use 15 over 115 because it includes VAT, right? And then on other transaction, you'll be like, oh, this is an exempt supply. What do? I tell the lecturer that there is no VAT. The reason why is that it's an exempt supply. What kind of an exempt supply is it? You give them the name of the exempt supply, right? I think it's gonna make sense when I show you the list of the supplies that I'm talking about. Right. So when it comes to taxable supplies, we have two taxable supplies. We have the standard rated and the zero rated. The standard rated basically means that you multiply by 15%. The zero rated, it means that there is VAT, but it's a 0%. Guys, when it comes to this, please don't argue with me. Maybe go and argue with the lecturers why they say that there is VAT, but it's a zero rated. But then that's just how it is. Right. When you're in a debate with somebody and you're talking about tax, right, you tell them that we have taxable supplies. The first one is standard rated, the second one is zero rated. The standard rated is taxed at 15%, the zero rated is taxed at 0%. And obviously they're going to ask you, Kuri, Chomi, are you serious? Why are you saying that it's taxed at 0%? There is no such thing as zero, right? But you tell them that in tax, when something is taxed at 0%, when it comes to VAT, right, it is a taxable supply, and then it's taxed at 0%. That's just how it is, right? So, moving on, I feel like we're getting to the interesting part. Yes, this is the interesting part, right? So as I've said to you guys, the standard rate is the 15%. These are all the things that fall under the definition of supply. The one that I specifically told you guys that I prefer to show you guys was focus on the things that don't fall in this definition, right? Because even here they didn't even give you a list because they know that the list is very lengthy. We can spend the rest of our lives trying to list the standard rated supplies because all the things that are not on this zero rated and exempt rated, they fall under the standard rated. That's just how it is, right? So um the list for the zero rated, the one that normally comes through your assessments, is the exportation of goods and services, right? So this means that when you sell products maybe to Zambia, right? Maybe you sell products to Malawi, you sell products to Mozambique, right? There is VAT rated at 0%. When a self-going concern, right, fuel levy goods, these are just like your fuel products. Basic foodstuffs, right, these are like your basic foods like maize meal, fresh vegetables, fresh fruits, right, and eggs, right, and got gold coins, right? This one doesn't normally come a lot in text to AB, but just know about it. Even the illuminating concern, right, it doesn't normally come as well. And then the goods on behalf of a non SA vendor, right, just know about it as well. And then international transportation, right, so meaning to say when you are transporting passengers or goods outside of South Africa, you are paying VAT at 0% as well. Services rendered outside of South Africa, zero rated. It's the same as exported goods. Services to non-res, non-vendors, right? Zero rated because they are non-residents and then they are non-vendors. Supplies to independent branches outside South Africa, right? Can you guys realize that anything, any service, any good that you're trying to sell outside of South Africa is zero rated, right? Mostly because when goods are being transported outside South Africa, there are import duties that are paid, right? So the SARS doesn't want to like make you takes you twice, right? Because now you're paying maybe the import duty or the what are those things that are paid maybe by the borderlines, right? Those import duties, right, or export duties, right, and then now you have to pay VAT on top of that, right? Can you see that you're being taxed twice, right? So repair, maintenance, cleaning, aircraft or shipment, this doesn't come out a lot. And then intellectual property rights doesn't come out a lot. The ones that come out a lot is municipal rates, that one comes out a lot, and then agricultural goods, right? So you can get a question that says that merely exported goods maybe to Zambia, or merely is what is it, a hairdresser, that's a service, right? When you are plaiting people's hair, and then now you decide to plait people's hair that are maybe in China, right? Can you realize that that's an export of a service, right? So that service is zero rated, right? Because it falls under the zero rated supplies. So this list, guys, you have to know it off by heart. It doesn't, you don't go with it in your assessments, right? Just sit down, try to read each and everything, and then if you don't understand, you can consult, go to, oh, what does this mean, what does this mean, right? And then also the exempt supplies, this basically means that there is no VAT charge at all. There is no VAT. It's not zero rated, guys. It's no VAT. The reason being it's an exempt supply, right? So the one that they usually like is the financial service, right? Those are your bank charges, and no, those are your interests, not your bank charges, those are your interests. And then letting of residential accommodation, right? Educational services like at UJ, we don't pay VAT because it's an exempt supply. Trade unions, association not for gain, that doesn't come out a lot. Supply of goods by a non-res, that this one comes out sometimes. Creche or after school service, this is more like an educational service. It's an exempt supply. Sale or letting of land, right? Levies to body corporate HOAs, this one doesn't come out a lot. Accommodation by employer to employee, this one comes out sometimes as well. Supply by political parties, this one doesn't come out a lot, but financial services, they do come out a lot, right? The ones that I've seen a lot is the financial service one and the letting of res. The other ones do come, but they're not as much, right? So okay, now the homework that you guys have is to try and go through the list, right? And then when we do the question, or when I send you the question that I'm gonna send it maybe tonight or tomorrow in the morning, right? Please try and do the question and see whether you're able to identify the standard rated supplies, the zero rated supplies, and the exempt supplies, as well as calculating the VAT. Obviously we're gonna do the question together on Wednesday, but just do me a favor and try to do it on your own. Okay, we are almost done. So the rates for types of supplies, right? The standard rates, I said 15%, the zero rate is 0%, and the exempt supply, it's a no VAT, right? There is no similarity or whatsoever between zero rated and exempt supply, as you've seen from the list. A zero rated supply is a zero rated supply, an exempt supply is an exempt supply, right? There is no relationship, right? So this is the explanation to why the zero rated is a taxable supply, because can the vendor claim the input VAT in relation to those supplies? For zero rated and standard rated, you are able to claim VAT, but then for exempt supplies, you are not able to claim VAT, right? So moving on, this one you just have to know it off by heart. It doesn't get asked, could he please explain the difference between standard rate, zero rated, and exempt? No, it doesn't, right? But you have to know the difference, and you know the difference through the list. Okay, so goods and services, right? This is the definition of the one that I was avoiding to explain to you guys, but I just felt like I should maybe put it here. so that I can show you guys some of the goods that are a bit tricky but that really come out in your assessments, right? So a goods or services can be a corporal movable things, fixed property including real rights in things, then fixed property and electricity, right? So this one I put it here because and fixed property and electricity, right? This one I put it here because electricity is a good, right? You can pay VAT on electricity, right? The things that you can't pay VAT on is money, right, under a bond or a revenue stamp, right? Those are the things that you can't pay, that are excluded from goods and services, right? So you can come across a transaction that that wants you to calculate VAT under a revenue stamp, right? You basically have to say no VAT. Why? Because it doesn't meet the definition of a good or a service, right? So this one here is also very important, right? This one, what I want you to take away from this slide is that for a motor car, for entertainment, for fees and subscriptions, right, the input VAT is denied, right? Just know it as it is, right? Because that is the reason that you're gonna be given in all the assessments that you're gonna write, right? So they're gonna tell you that Millie bought a motor car for 10,000 rand, right? Please calculate the VAT that she can claim on the purchase that she did for the motor car, right? What you can say here is you write on the column that you're supposed to calculate the VAT on, you say VAT is denied, right? And then on the calculations it's 0, right? The reason why I'm telling you guys this is that those things here, the three things, they come out a lot. The motor car, entertainment fees and subscriptions, they come out a lot, right? And the moment you know that, just know them as they are, that there is no input that is claimed here because the input VAT is denied, right? For your second year level, that's all that you have to know, right? So when you go maybe further for your CTA, they can explain to you why and how that happens, right? But as of now, just know that those three things, the input VAT is denied. That's it for now, right? So do you guys have any questions? I hope you guys have any questions because I've said a lot of things and I don't expect you guys to have understood everything and anything that I said. Please, guys, do you have any questions? Are you sure, guys, you understood everything that I said? Okay, let me stop recording just in case if you don't want to go viral. I'm joking, you won't go viral.